Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Thursday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So today we're going to take a look at the portfolio, the overall value by the metrics. We're going to look at our buying power as well as the individual stocks and how they're performing, and take a look at my watch list and see where Berkshire is trading at as well. So for today, we are down about $420, down about 1% today. That 1 week mark, we are down $222 with a 0.4% loss. That 1 month mark, we're sitting at a $1,500 loss with a 2.5% in the red. 3 month mark, we are up $5,400, 10.3% return here in the past 3 months. Then year to date, we are up $9,058 with an 18% return. That 1 year mark, we are up $13,000 with a 28% return. And then all time since I believe it was April of 2018, we are up $23,500 with a 66% return all time. Buying power is sitting at $197.37. That will be going up here in the next week because I'm going to get paid from Altria as well as realty income by the middle of the month, by the 15th. So, jumping into the individual holdings, realty income today is sitting at $62.46, 171 shares, $10,600 worth of market value. Average cost is $65.02. 18% of the portfolio is in realty income. Today, we're up $6.84. Total, we're down $400 with around a 4% loss here on realty income, but a dividend coming in on on the 15th of October of $45.06. So a nice cost down average opportunity here, down about $3 per share. Not a huge discount, but a small one that I could take advantage of if I wanted to focus my capital on this position. Next up, we have Altria sitting at $50 even. We have 320 shares, $16,000 even worth of market value. That looks really cool. Average cost is $47.27. 27% of the portfolio is in Altria. It's a dividend aristocrat as well. Today we are down $188, down 1%. Total, we are up $873 with a 5.5% return here on Altria, and that dividend's coming in on October 10th of $326.40. That, with the cash that I currently have in the portfolio as well as realty income, will be enough to buy me 2 full shares of Apple, which I'm super excited about. And that's every single quarter as well. So I should be able to afford 2 shares of Apple every quarter that Altria pays me, which is awesome. Then we've got Coca-Cola. I feel like it's really overvalued here at $70.52. We have 15 shares, $1,000 worth of market value. Average cost is right around $61 per share, so I'm up nearly $10 per share here. 1.8% of the portfolio is in Coca-Cola. Today we're down $7. Total, we're up nearly $150 with a 16.5% return here on Coca-Cola. So guys, I'm not touching this stock right now because I feel like it is way overvalued. I do love Coca-Cola. I do want it to be one of the bigger positions in the portfolio, but I am not adding it at these prices. Next up, we got Apple at $226.54. We've got 6 shares, around near $1,400 worth of market value. That'll be going up here really soon, within the next week and a half. Average cost is $210.88, so we are up about $16 per share here. Right around 2.5% of the portfolio is in Apple stock. Today we're down $1.44. Total, we're up nearly $100 with a 7% return here on Apple. Guys, this is going to be the single biggest position in the portfolio. Trying to manifest that, trying to put that into the universe and put that out there and grow this position as much as I can. So I'm super excited to keep putting money into this position. Apple is by far one of my favorite companies. It will be the single biggest position in the portfolio. It's just going to take time, guys. There's a lot of really big positions in the portfolio, and I'm excited to build up this and this Visa and Coca-Cola will soon take over the positions of Altria, T. Rowe Price, and AbbVie. It will take time because those are all $10,000 plus positions, so it will take quite a while to boost those other positions. But it will take time, but it will be worth it once everything evens out. Then we have AbbVie at $195 per share. We have 95 shares. $18,500 worth of market value. Average cost is $95.20. 31% of the portfolio is in AbbVie. Today we're down $146, down about 1%. Total, we are up $9,500 with a 105% return. Guys, this is by far my biggest win when it comes to investing so far in my career. I love this position. The dividend has grown exponentially. It was $1.07, now it's $1.55 per share. The stock appreciation after the acquisition, it has grown very well. The company's meshed together and the profitability has grown for the company overall. So this is going to be my biggest, my most fruitful tree within the portfolio, and I think it will be that way up until T. Rowe Price doubles or up until Apple or Visa are bigger positions. So right now, guys, this is by far my most fruitful tree, and I'm just going to keep letting it grow. I'm not adding at these levels because I am up so much. But if it ever drops down closer to my average cost, right around that $100 mark, I will be adding if it goes to those levels. Next up, we've got Visa, $277.32, only one share, so of course market value is going to reflect the stock price. My average cost is $268.29, so right around $270. 0.5% of the portfolio is in Visa. Today we're up 32 cents. Total we're up $9. 3% return here. Guys, this is still in the buying range for me. This will be one of the bigger positions in the portfolio. In fact, I want it to be right behind Apple, and I would not be mad if just with sheer appreciation, this position overtakes Apple in the future. So this is one of those companies I use every single day. When I pay for anything, I use my Visa card. They have the best payment network in the world, or in the US at least. I think is the best payment processor in the world. It's got huge margins, a great competitive advantage. I do think that the DOJ lawsuit is going to be a really good buying opportunity here in the short term. I'm hoping that there's more bad headlines so I can buy this at a great discount. Then T. Rowe Price is at 106.51, 101 shares of this dividend aristocrat, $10,000 worth of market value. Average cost is right around $110 per share. 18% of the portfolio is in T. Rowe Price. Today we're down $80 total. We are down around $320 with around 3% losses here with T. Rowe Price. But guys, this is one of those companies that I have a lot of faith in. The management team does a really good job. It is a little bit cyclical when it comes to interest rates and how they change, because when the overall market dipped, so did T. Rowe Price. But over the long term, I feel like the stock market is going to be it's going to appreciate, and it's going to compound. I think their funds will do the same thing. And overall, I think the profitability of the company is going to go up. Overall, I think the stock market's going to appreciate over time. So with it being a higher interest rate environment right now, you can get 5% on your T-bills. So even Warren Buffett sold out of a shit ton of Apple and put that into T-bills. So I understand why T. Rowe Price is down in the short term. I want to take advantage of this as much as I can. But given the fact that Visa is going to be a bigger priority right now, I did use dividends to buy another share. So I'm going to keep doing that if it stays around these prices. It's not going to be my main focus, given Apple and Visa are going to be the big focus right now for this foreseeable future. But T. Rowe Price is one of those that I'll buy if it makes sense. And then, of course, we got Berkshire Hathaway sitting at $450. Guys, I want to buy this like at a 50% discount from where it's at right now. Well, excuse me, like 25% discount. 50% would be $200. But if I can get it around $400, I will. And I own myself 7 shares now. This is going to be my 7th year of investing. I want to own 1 share per year of Berkshire. So I own myself 7 shares worth of Berkshire Hathaway as of right now. So eventually I'll get even with my goal. It just doesn't pay a dividend, so I don't want it to be a huge position as of right now, but this is going to be one of my retirement positions. Even after Buffett's gone, I have a lot of faith in Greg Abel and Ajit Jain, who run the businesses day to day, and Ted and Todd are the other investors that kind of Buffett has trained in his ways of value investing that have been there for decades. So I'm not worried about the capital allocation either. They are actually a little bit more of Swiss Army knives. They're the ones that bought Snowflake. They're the ones that bought Amazon. So they have a little bit more of a tech-based mindset, and tech businesses, I feel, are bigger when it comes to market cap. So they'll be able to kind of get Berkshire Hathaway out of some of those older investments like the Kraft Heinz or even some of the oil companies, they're going to be, I feel like they're going to put Berkshire more in a tech-focused realm when it comes to like maybe Meta. They could put some money into Netflix or something like that. So I just feel like overall, even if Buffett's not at the helm, that might, I don't think they're going to do a better job at capital allocation. I just feel like they'll do a different job of capital allocation. And overall, the returns might be a little bit worse for Berkshire, but as long as the culture, which I think is very, very strong there, as long as the culture stays and they keep good people like Greg and Ajit at the helm, I think we'll be fine overall. I think Berkshire will do great over time. So the float isn't going to go anywhere when Buffett dies. People are still going to buy Geico Insurance. People are still going to be buying Coca-Cola. People are still going to buy See's Candy. So, and those are the three or four businesses that I really like. Plus, they still own Apple. So overall, I like the stock portfolio. I like the people that he's selected to carry on the legacy of Berkshire. And if Buffett has a lot of faith in those people, after he's built this for his entire lifetime, I feel like we should as well. So overall, guys, I owe myself about 7, or going to be 8 shares next year of Berkshire Hathaway. But with that being said, guys, thank you so much for watching. Remember to hit the like button on this video. Remember to subscribe to my channel, That Dividend Guy. It really does help. I'm excited to be doing daily videos again. I'm just so excited to be back, guys. So thank you so much for watching. And I will see you guys tomorrow with another Robinhood portfolio update. Take care, guys.